Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to cover a couple of ideas of how to approach earnings. This week marks the first week of what is pretty much a 3-week series of very active earnings reports, and having a couple different ways that you can look at these types of positions I think can be very helpful. So as we begin a general discussion in NFLX, I was looking to this primarily off of the daily chart and looking at the idea that I thought it was going to head higher. Intraday we did have a nice symmetry setup. You can see that if you come back down to something like a 15-minute chart, just comparing previous declines that we had seen in relationship to the decline that we were going through this morning. So that was a helpful level as we began the day. As we got closer into the close, that's where I like to evaluate the actual place to put on my earnings trade. So while I would have preferred getting it on in slightly lower lows, we came in right there towards the close and put on an unbalanced butterfly, where you're looking at basically coming out and saying how far out of the money am I willing to sell, and puts in this case, because I was looking to be directionally long. So right there around 190 was an area that I thought was relatively safe. So we initiate the unbalanced butterfly for a credit, and tomorrow we'll wake up and pretty much just take in the credit received. A second way of looking at these types of trades is a little bit more of a directional bias and coming out and buying a call side butterfly. Now I'm usually going to look to do these a little bit wider with smaller size to help enhance the probability of success. As we traded in the extended session up into 210.79, if we trade there tomorrow, I should be able to get out of this trade at a profit. If we trade down lower, of course, I'll want to exit within the first 15 to 30 minutes of the day. But those are two ways to look at playing them. We have a third to look at that I think fits right in between what we've looked at so far, because something like this is going to associate more with people that enjoy selling out of the money premiums and having a high probability of success. This will resonate more with people that want to have a small amount of risk up front, but of course inside that you do lower your probabilities of success. You're kind of taking a little bit more of a shot around earnings. And then the third way, that if we open up where we are right here tomorrow, will also be a great way of looking at NFLX, and this is a very similar strategy to what we showed with the unbalanced butterfly in that previous section. The only difference is we do this a little bit closer to the money and we widen out the width of our strikes. So instead of being at the short 185 put, we're at the short $200 put. The width of those strikes allows us to take in a $2 credit on the entire position. So if we open up right here tomorrow, that is pretty much ideal. Anything to the upside, we still receive the credit we took in, and of course if the entire thing were to have just completely fallen apart, we're still getting a better than 1-to-1 risk-reward ratio when we initiate that trade. So 3 different ways of looking at that. I think if you enjoy things like iron butterflies, these are the next type of strategies to step into, and I think they can be very helpful around earnings. So with that being said, I wanted to make sure that you were also aware of the webinar that John is going to be doing this Wednesday. It's going to be October 18th at 7 p.m. Central. So this will be with John. He'll be going through a couple different ways that he likes to approach earnings and what he'll be looking to as we get through this next quarter. So I hope that's helpful and hope to see you at the webinar this Wednesday.